So again, Save America, Kill Inflation. Here to tell us all about that story is somebody who's had the story right from day one, Wall Street's top economist, my good friend Ed Hyman, founder and chair of Evercore ISI. Ed, you're very kind to come on. Really appreciate it. You know, there's two things I want to begin with, Ed. Today, price of oil got to $95 plus, as I'm sure you know. And then the second one is the Wall Street Journal editorial with some numbers from our friend Mickey Levy, right? 73% of the items in the CPI saw annual price rises of 3% or higher, and 55% of the items saw inflation of 5% or higher. The reason I say that, I mean, it's a good piece of research, but it's not just pandemic, it's not just containers, it's everywhere prices are rising. And I think, you know, there is too much money chasing too few goods.
So, Larry, it's great to see you. That segment you had with Steve Scalise was just fabulous. I could tell you were having a good time. He was having a good time.
Thank you.
What's happened here is that over the past couple of years, the money supply has increased 40%. And when that happens, inflation shows up everywhere. Natural gas is up 6% today. You just turn around, aluminum ingots, paper, chocolate milk. It's everywhere. Super Bowl ads. It's just like you said, it is everywhere. And so one of the things that has to happen is we have to get the money supply to slow down. And you do that in part by slowing the increase in government spending. To go back to what you were talking about a few minutes ago. And in the CBO budget, which I'm not sure you should put much weight on, but the Congressional Budget Office has government spending basically flat for a couple of years. And if that happens, there are other things that have to happen. The Fed's going to have to tighten, but that could do a lot to get money growth to slow down. And then with a lag, which could be quite a bit of a lag, inflation will slow down. But in the meantime, in addition to things like oil prices, rents are going up. And maybe more importantly, wages are going up. And now people see the price go up, so they want a pay increase, and companies feel more inclined to give a pay increase out of kindness to their families, their worker families. And so you have a wage price spiral has already become entrenched in this country. So inflation looks pretty bad. Another part of it is that it's very good for corporate profits. Right now, you don't think about it this way, but prices are up 7.5%, and wages are up something like 5%. So that you should have very explosive profits. They haven't been quite as strong as I thought they would be, but they're probably up 30% in the fourth quarter.
Does that? I want to come back to the inflation, but for 1 second, in terms of the stock market. Will the profit story offset the Fed tightening interest rate hiking story, in your judgment?
In my judgment, which is based on history, it will. So I think about S&P earnings in the fourth quarter, the quarter behind us, at an annual rate, they're about $220. So you can figure that out. If PE was 20, the market would be about where it is. Now, looking out, I think Fed funds are likely to be something approaching 3%. They're now 0. But I think S&P earnings are going to be about $300. So I think that balance will work out. But you have to have earnings. In the past, earnings have always driven the stock market. And then at the end of the cycle, the expansion is murdered by the Fed. They finally just kill it. But right now we're just have sort of a hat trick negative. We have Russia on one side, as you well know. You have inflation on the other side, and you have the Fed tightening. And we don't know how much they're going to tighten, how quick they're going to tighten. And so the market is under a lot of pressure right now.
You know, of course, I've always said profits are the mother's milk of stocks. But I want to go to the Fed. The Fed, what did you say? The Fed killing it?
Murdering it.
Murdering it. It's even better. I love that.
That's the great.
I love it.
That's the great Rudy Dornbush. That expansions don't.
That's right. That's right.
They're murdered by the Fed.
That's right. So I don't want to accuse Jim Bullard of murder, because I happen to like Jim Bullard. I think he's the best guy in the whole Federal Reserve System, just my view. But he is pushing, I think correctly, for a much more aggressive Fed tightening. Not only cutting the balance sheet off and starting to sell bonds, but he said something like he wants to see 100 basis points Fed by July. I mean, I don't even know. Ed, with a 7.5% CPI, and I don't think it's going down. I don't think you think it's going down. I mean, I think they should be doing, my pal Kevin Hassett is suggesting, raise the funds rate by 50 basis points each of the next several months until we see some signs of lower inflation. Maybe commodity prices come back down. Maybe the CPI or the PCE deflator comes down. But something that says they're getting on top of it. What do you think about that?
Well, it just doesn't work that way. In 1923, right? 1923.
I was there.
John Maynard Keynes said that it takes 16 months for a change in monetary policy to impact the economy. And our friend, Milton Friedman, always said long and variable lags. So somebody needs to educate all of us that it doesn't work that quickly. But one of the reasons the market is down is because everybody knows, either for sure or just a hunch, that this is going to happen. You know, the Fed is behind the curve, and right now people are asking themselves, why doesn't the Fed raise the funds rate tomorrow? Mm-hmm. And the answer is because they're scared, or we're scared, that it could panic the system. So we'll probably wait until the next meeting. But in the meantime, the balance sheet will continue to increase, and you know, we have some work to do in front of us.
It's not good.
But in the past,
it's not good.
Well, it's
too slow.
Life. You know, it's you know, we have a very strong economy. We have high inflation. Wages are going up. Prices are going up, and I think profits are going to be, you know, fantastic. I just raised our inflation forecast from 4 to 5% for the end of this year. And the problem, if that was right, the problem is that the Fed is still, you know, less than 3. So somewhere in here, you know, the Fed has to change their inflation forecast, if I'm right, and explain what their policy is going to be given this new regime.
Well, I'm not putting words in your mouth. I'm just going to invoke Rudy Dornbush, okay? And I'm saying, given this inflation story, there's going to be a Fed murder. These things never, Eddie, they never end pleasantly. I guess that's the word I'll use. They never end pleasantly. It's not, you and I, all the years you and I have been doing this stuff and looking at it, has there ever been a soft landing from a high inflation rate? Really? Last question.
No, but we're so early in this cycle. So what's going to happen is that the Fed's going to tighten. They'll get to a point, let's say Fed funds at 3, something will break or slow down, maybe commodity prices or housing, and then the Fed will ease a little bit, economy will keep on growing. Well, and this could be 2 years from now. And then, oops, the Fed will tighten again, and this could go on for a decade, I think.
Wow.
But the end is when they murder the Fed funds are going to be higher. You're going to have an inverted yield curve.
Yes, sir.
That's the end.
All right, we'll leave it there. You're the master. But thank you for reminding me about Rudy Dornbush, who was a pretty smart fellow, by the way. You're very kind to come on, Ed Hyman. We appreciate it.
My pleasure.
You're the best of the best.